Hey guys, it's Matt. I got a request for a video about scanners. So let's talk about how I scan for stocks and a little bit about, not a little bit, probably a lot about kind of just scanning in general and sort of scanner theory, if that's a thing. We'll just talk about, how it can get more complex or you can kind of keep it simple and do some legwork on your own. Um, but let's just start with a very simple idea that now again this is for swing trading, right? This is for going long with momentum. Okay, so t- that's probably a really important thing to cover right off the bat, right? Like I'm not scanning for stocks to short. I'm not shorting small caps here. I'm literally, we're just talking about, oh, things are going up, let's see if we can get a piece of that. And it can be pretty simple, right? It doesn't have to be complex. So let's take a look at a really simple scanner, right? And this is something that if you guys have not heard of Mark Minervini, look him up. He's been around forever. He's given plenty of talks. There's plenty of videos on YouTube about his interviews and stuff like that. And it's a gold mine, guys. The information he's sharing is a gold mine. If you just listen to what he says and actually practice it, you'd be fine. Um, So really simple. We're just what this scanner is doing, and I'm actually going to edit it here in a second. But it's scanning for two things: market cap above 250 million. So we're kind of small cap and above there, right? And then and you can modify that any way you see fit, right? And we're gonna add some things as we go along to the scanner. But you can also see that this is that the recent close has been above the highest high of the last 252 periods times 0.75. So this would be basically you're finding stocks that are within 25% of their yearly high, right? Which actually, let's make that even better. Let's go, we can probably leave the zero off, but zero point 0.9, right? Cool. All right, let's do this. So the reason I'm saving it here is because I want to. Oh, cool! It automatically refreshed over there. Cool. So you can see then that this is think or swim, and this is just kind of the peculiarities of this system. But this looks the same as this, right? So that way, when we go to our charts, we can just start scanning. Okay. So this is a year chart on the right. This is 5 minute over here. It doesn't really, we don't really need that for this discussion, but you can see that that returns some. Oh, look at that. This was a beautiful setup, right? Not one that I was in. And this is what we're looking for, right? Mostly goes up. Maybe an entry here. This is hindsight, guys, right? Understand that hindsight is, you know, me pointing out, oh, there was a setup 3 weeks ago is freaking worthless. Uh, but stock goes up, pulls back to a moving average here, which might mean something. And then, maybe you can get in here. Uh, and this is actually kind of I like what this has been doing since October, right? So I'm actually gonna stick that on my watch list. Glad I'm doing this. Apple, I never heard of that. Don't know what that is. You can see kind of getting some like, the hell is this thing? It's all jumping around. Like this is an ugly chart, right? So it's like, all right. I mean, yeah, that's there's some stuff going on there, but the same thing here. So you're gonna have to weed through it a little bit. This is kind of a nice. This is already on my watch list, I think. I would hope so. Doesn't look like it is, though. All right. Uh, Again, glad I'm doing this. But you can see this is kind of the movement we want. We want a nice move up, some sideways consolidation, nice move up, some consolidation here, a little bit longer. It kind of played around through here. Another nice move up. If you caught this swing somewhere in here, that would have been a tough one, right? Because you probably would have tried to maybe get in here and here on this candle. You would have been stopped out probably both times. And this one would have, this is maybe more of a holy shit, here it goes trade, as it opens here, dips down. And anyway, again, I'm playing hindsight here, but that would have been a nice move to catch. And then lately it's chopping, but almost everything's chopping lately, guys. Just the past week or two that we've had with the huge gap down, and then the huge rally on Nvidia earnings. It's February of late February of 2024. So yeah, that's just what happened recently. But you can see that we get some good charts to look at. That's a really nice one. Look at this move. Nice big long move here up, right? Some consolidation, another move up. I mean, man, if you can catch that, that's a nice trade. You might have tried a couple times in here, and maybe like if you get in, let's just talk talk theory for a little bit. If you got in here, it'd be nice if I knew how to use my own system. If you got in on this candle for the break of this, you probably hit one R. Maybe you took some off. If you're like me, if you play like me, I take some off here, and then I stop out at break even probably here on this day, right? Which is fine. Well, I mean, it's not a huge winner. It's going to be a very small winner probably, but okay. Uh, then maybe that happens again here or here, but then you've got this day. I'm getting off topic here, but I think it's important. Uh, you've got this inside day here, which then you've got to break out the next day, and it actually opens below the high, it looks like. What's the open here? 27. Yep, I'm confusing myself. Yeah, definitely. So it opens below the high and then rockets. And, so if you can get this, you're already at, this is 4R, so probably five. This hits 6R. That's a juicy trade, even if you're probably taking profit along the way here, I'm guessing, unless you're, a balls out trader who just likes to all or nothing trade, which is fine. If you can do that and make that system work for you, more power to you. That's awesome. I love it for you. It's just not me. I like to take my profits along the way. Yeah, even this is a nice, let's say we've got a chance at a breakout here. It looks like maybe like we're going to consolidate a little bit more on this, but you know, we consolidate a little more, and if we can get back up to these yearly highs, so that would be a nice target, right? If you're trying to get in here, I keep zooming in too far. If you're trying to get in here, and then maybe you're thinking, okay, maybe we can get back up to this 315 area. Nice little target. I mean, it's a lower price stock, right? So, okay. Anyway, enough of this. You can see that, and I'm only through the A's, right? I'm not even through the A's. Like, there's tons of meat here. Some of it's junk, like this needs to get weeded out. This needs to get weeded out. Um, some of these aren't particularly, that one's okay. Maybe put that on a watch list, but you can be more or less discerning, right? It's really up to you. There's no right or wrong answer here. This is where trading is highly individual, and you have to figure it out for yourself to some degree. That wouldn't go on a watch list for me. This thing's it's all over the place. It's not real for me. Um, I like to see the just the nice long uptrends with orderly pullbacks. Not too bad. It's kind of all over the place, but again, these lower price stocks. Okay, so that being said, what we can do then is we can add, let's add volume, and let's use this. We'll go to just below 1 million, right? Okay. We'll save that. I'm debating whether I should even keep my little stupid face in the in the corner. You guys can deal with it. You look at me. All right, so now you can see it's going to be the stocks we've seen before, but we've trimmed some of it, right? Now we've got some of that junk that was kind of gappy all over the place is not going to be here anymore, right? Yeah, there's some good stuff in here, right? There's a gappy one, but I don't like really gappy stocks because it can gap down just as easily as it can gap up, and that can be bad for risk management, right? You get in a trade one day and you're holding it overnight, and unless maybe well, even if let's say you got in and it hit 1R and you move your stop up to break even, but it gaps down to negative 3R the next day, you're porked, right? You're still holding most of your position to a negative 3R. Like that's just sucks for risk management, right? This one's making a nice run here. I don't, this isn't actionable for now, but would I maybe put this on a watch list to keep an eye on? Sure. I mean, maybe we get some after a couple more up days or something, we get a nice orderly pullback, and then it makes another run. I don't know anything about this company, but you can look into it and see, does it look like actual strong news? Is it legit? It's pharmaceutical, so you never know. But yeah, might be something you want to put on your here. I'll add it to my master watch list. All right. And by the way, guys, so that's part of it. I just keep a master watch list of when I go through these scanners, and when I go through scanners in the morning, I scan every morning pre-market, and sometimes after hours if I have time. I'm usually working after hours, like my real job. Uh, Hopefully not for much longer, maybe. Um, I don't know. I like my real job. I'm probably never going to quit, but even if I don't need it anymore, so you can see we're still getting some junk, but I mean, most of this is pretty good looking stuff. Never heard about this company. I don't know what that means. Amazon, weird. Uh, Look at that thing. Jesus Christ. Wouldn't that have been awesome to get in at $30 less than a year ago? Abercrombie and Fitch. Who knew? Okay. Yeah. Okay. So one other thing you can do. I'm sorry, guys. I'm getting lost here today. One other thing you can do is add ADR. That's a big one. That's average daily range. I'll actually just pull this down here and show you. Actually, I'm going to add it on here anyway. So let's do this. I want to do study custom, and then we're going to add in this. So you can see what I'm doing here. This is the average over 20 days of the high minus the low over the close. Okay, that gives you the what they call the average daily range, which is just like how much does this stock move from high to low every day, basically, like percentage wise. All right, that's why the times 100 is in here. That makes it a not a decimal number, makes it a percentage. And then we're going to say we want stocks that are, the ADR is greater than 4. Okay, and then let's save that. Okay, so that changes things a bit, right? So basically, the deal with ADR is actually here. I'm going to pull this down on the screen and just let you guys see what my notes are for this. Um, the deal with ADR is that really the reason traders like to scan by ADR is that it's all about maximizing your buying power. What some people think is like, okay, if this has a larger daily range, then my winner, it can take off and move a lot quicker and become a bigger winner more quickly, which is true. But the opposite is also true. It can also move very quickly in the other direction, which you should have stops in place. But basically, if the average daily range is higher on average, right, is what it means, then your entry is going to be farther away probably than your stop than it would be on a lower ADR. So you're just going to have to adjust for that, and then that means your R is bigger, right, or farther away, and then so is 1R, right? So your stop out R is a certain percentage away, then that makes 1R that same percentage away in the other direction, right? So it doesn't give you edge except for it will maximize your buying power. And I just kind of wrote out an example here, right? So we're going to talk both are $20 stocks. We're risking 1,000 per trade, right? So let's say that's 1% of a $100,000 account. Okay. So stock A is stop is 1% away, 20 cents from the entry, and that's because the ADR is smaller, right? I didn't include the ADR in here because it doesn't really matter, but just know that on a smaller ADR stock, your risk will be closer, right? So 20 cents. So you'd need 5,000 shares at $20 with that risk, with 20-cent risk, which is 100K in buying power, right? 5,000 shares at $20 is $100,000 in buying power. So you're basically chewing up 100% of your buying power, not counting if you've got margin. So stock B is a higher ADR stock, and so the stop is 4% away, so 80 cents of the stock price, right? Because they're both $20 stocks, which means you'd only need 1.25K shares at $20. That's only 25K in buying power. Yeah. So you can see that just trading the higher ADR stock, the one that's moving more, there's no better edge there, right? It can stop you out as much as it can go in your favor and go to 6R, right? But it requires less buying power, which means not only can you trade that play, you can trade some other plays, you can spread yourself out a little bit more. So that's really the thing with ADR. When you see people adding ADR to to their scanners, that's really the main reason. I see that being misrepresented a lot as something that gives you edge because you want these stocks that move a lot. Maybe. Um, you might want to look at, well, you can just look at charts and see gaps. I was going to say you could look at average true range as well because that includes the gaps overnight. But really, you just need to see that probably with your eyeballs. Um, I'm sure you could create some sort of criteria about how many gaps there are and how big they are, and then weed those out of your scanners. But as we're going to talk about in a little bit, sometimes that's not so great. So um, let's talk about where are we at scanning here? Okay, so we added volume, we added ADR, we're at 90%. I think that's all we need to add. I mean, this would be a great scanner. I'd use this, right? In fact, I do. Uh, Sometimes I take the ADR off and just don't include that. Sometimes I play with the volume or the market cap, depending what I'm looking for, depending which sectors are hot. Uh, there's some other ways to go about this too, where um, there's a guy on Twitter named he's on YouTube here now too. He just started making videos, which is awesome. It's ASIM trading, so ASYM trading. He's great. He's been in the market a long time and he's got a lot of wisdom and he's talking about his scanning process. He uses like the average daily range in the Bollinger Band width, which you can see here. I started playing with that the other day, so these are up here. In fact, here I'll just pull up. Oops, pull up like his scan. So it's a little lower priced and lower market cap that he trades, but you can see there's that same ADR over four. But yeah, then what he's looking for is that this is Bollinger Band width on the 30-minute chart. I think he uses either 30 minutes or hours, something like that. I think I have 30 minutes set up here, compared to the average daily range of the same the last 20 days, right? And he's looking for the Bollinger Band width to be smaller than the ADR, which is basically what he's looking for is the stock moves a certain amount, right? And then it compresses. That's why the Bollinger Bands are tiny, right? And then he's looking for okay breakout because that's what this trading is all about, right, guys? It's about uh, big moves, compression or consolidation, whatever you want to call it, and then big move, and then consolidation, big move, and we're trying to catch those moves. We're trying to catch those breakouts, right? Um, so yeah. Anyway, what do I do here? Okay. One other thing I just wanted to talk about, and this is just basic theory stuff, and this was on the notes before. I can bring it back. So the basic deal with scanners is this. If it's a less complex scanner, like when we started out with just you know within 10% of 25 week or 252 period highs, right? Yearly highs and simple, I think, market cap, right? The less complex it is, the more obviously the more results you're going to get and the more time it's going to take you to filter through those stocks and see what you want to add to your watch list, right? But it's more inclusive. So you're going to basically make sure that you're not missing much by putting in that extra work. Um, and I would say it probably is market dependent, whether that's important or not, right? If the market's on fire, you probably don't care if you're missing some stuff because yeah, there's enough for everybody, right? There's a ton of meat on the table. Um, and you're not too worried about like, oh, my scanner cut some things out and I missed it, and damn it, that would have been a good play. Here I am sitting on my hands because the market's just so roaring that you're never sitting on your hands. Almost, you're kind of in it all the time, right? Whereas a more complex scanner, the more things you start adding to it, you know, it's weeding things out for you, which can be really cool, uh, because it takes less time for you, but the things you're weeding out might actually end up being good plays, right? Just because, like, let's say you start using ADR and you're like, I want an ADR over five. Okay, cool. You're going to miss any stocks that could still be really good setups that have an ADR less than five. Is that something that's really important to you? Some traders say, yeah, that's great. I know Christian Kulamagi, who I got some names here. Minervini, Kulamagi. I don't know if that's actually how he spells his name. It's like spelled different everywhere you look. And I'm not sure I'm saying it, pronouncing it correctly either. Dr. Mancy and then Matt Petralia are just some people that I follow, and I could add um, ASIM trading on there. I think he's a good resource as well. So I forgot what I was saying about that, but yeah. Oh, I was going to say Kolamagi, I think, is big on ADR, right? And that's fine. Keep in mind that Kolamagi made his millions in like the most roaring bull market ever, right? Which is that's what you want to do, by the way, with this kind of trading. Like you don't trade this in a bear market because it probably won't work very well. You'd have to switch tactics, and we're in a pretty good market right now, right? Everything's hitting all time highs. There's what are we complaining about? Not everything is hitting all time highs, but you know what I mean. The broad market is making all time highs. Spies at all time highs, and yeah, things are going well. So anyway, yeah, you can choose to cut out those things by saying, okay, I'm going to have an ADR scanner of anything more than five, anything less than five gets cut out, or you can choose to include it, put in a little bit more time, look through all those charts that are included without scanning for ADR, and put in that legwork and maybe catch a few things that the other people don't, right? And again, this is uh, trading is very much a it's you versus the world, right? So you're going to want to kind of figure out your own deal, right? And sometimes you have to think, okay, if everyone else is doing this, like everybody loves this Swedish guy named, I think he's Swedish, guy named Christian, and they're doing exactly what he's doing. How can I do things a little bit differently to set myself apart and maybe catch some of the meat that the other people aren't getting, right? Maybe I don't worry about ADR so much. Maybe I don't care about that. Maybe I've got a shit ton of buying power and ADR means nothing to me. Maybe I go for the small cap stocks, which is actually Christian says that all the time that with smaller accounts you can trade those smaller cap stocks because you don't need as much volume and liquidity as you do when you're a whale. So one other thing I just wanted to call out here is you've got FinViz, guys, for those who maybe are like, well, I don't have Thinkorswim or I don't have another scanning software like any of the ones that you have to pay for. Thinkorswim is free with an account at Schwab. Used to be TD Ameritrade, but Schwab took over. Um, and it's a good enough platform. I mean, it's got its bugs because it maybe tries to do too much and be the thing for everybody. But I actually have really grown to like it. I used to use Cobra when I was doing other kinds of trading, and I still have an account at Cobra, and so I was using Dash Trader, which has its advantages, but Thinkorswim's pretty. It's nice to look at. For real, that's a thing, right? Like, I mean, it's like all these shitty colors, and it's hard on your eyes. It's just hard to sit in front of the screens for a long time. Whereas Thinkorswim really, I mean, like looks pretty good, It's pretty easy to look at for a long period of time. Although there's a video coming up on like, why are you looking at your screens all the time? That's dumb. Um, yeah. So anyway, FinViz is free, okay, and you can do basically the same thing, right? So basically, what I did here was, from the home screen, you go to Screener. Let's see here. You can go top gainers. You can go new highs. Let's go top gainers, right? And then you've got average volume, right? You can go over, let's go over a million. What else was I looking at? Oh, price. You can go, let's say over $20. It's usually pretty good, right? That that trims it down pretty well, right? That gives you kind of a nice easy list. I mean, Carvana's that's a big gap up, but it even gives you the little charts, which is really nice, right? But it's free, right? If you want a little bit more, you can zoom it out a bit. Anyway, it's you know, it all depends on how much work you want to put in and what you can take out of it. There's a ton more filters here that you can use. There was one other. Oh yeah, market cap. That was one of the things I was going to say. You could so go anything over 300 million, right? That's a really nice. That's a great scanner, right? Is it going to catch everything that we did with the other one? No, probably not, right? But and then you can also, instead of using top gainers, you could do the new highs, right? I mean, there's so much in here. So anyway, it's free, so you have no excuse. You might have to put in some more legwork with the free stuff, right? But I mean, how bad do you want it? At some point, I don't really get into that very much, like the whole like, oh, you just got to outwork the next guy and blah blah blah. But you kind of do. Really, you have to outwork yourself. If you're not achieving what you want, then you might have to work harder. You might have to also work smarter, maybe a combination of the both of two, right? But yeah, at some point, if you're not nailing it, you've got to figure out how to nail it. So, um, yeah, I don't think I'm going to get into how to build a watch list yet today. I mean, this is right. Like what we were talking about is, you're scanning and you're looking through charts, and you saw me add a couple of these. Like I was like, oh, this looks kind of nice. I think I'm just going to pop this onto my watch list, right? Like I'll keep an eye on this. It's not actionable now, but it might be in a couple of days or a week or a month, right? If this one's not on my scanner, maybe I would add that. I'm not going to add that to my master watch list right now. You can see my app position, which I got stopped out on, so I can take that off. But yeah, anyway, you just look through these and then you go, okay, this looks like it might be a stock that I'd want to trade, and maybe it's going to set up within the next week or two or month, and then you add it to a watch list. So then you will look through that watch list every day, and then you pare that down based on what looks nice and juicy, right? Like we saw this one before. Where's Where's the one I was looking at before? Yeah, like this, we missed it, right? But this would have been a nice juicy, like, oh, it bounces off the 10 simple moving average, and then maybe you catch this move, And again, if you get in there right at the open, yeah, you're probably above 1R at that point, right? Let's play around. Yeah, yeah, you're at 2R there, right? Easy. So yeah, this was a decent trade. And again, you're not always looking for the home runs. I mean, you're hoping for home runs. See, my dog's pissed. She doesn't want to hear any of that whole I can't do it stuff. No, you're I mean, hopefully you're hitting a home run every once in a while, but those base hits add up, guys, and they also keep you from, anything that's not a stop out is a step in the right direction, right? If you're hitting like a half R trade, a 1R trade, a half R, a quarter R, at least those aren't negative 1R trades, right? So anyway, you'd be looking through this stuff to see like, okay, what's actionable now? Like maybe this one, right? Depending how this consolidates, might be actionable pretty soon. In fact, you could maybe take this on Monday. I'm talking to you on a Saturday, right? So this is Friday's chart or Friday's candle. You could maybe look for, okay, if it opens inside here and it breaks above this candle, maybe that's the day it pushes above this recent pivot here that it's hit twice, right? And then maybe that's I think I talked about this earlier, but maybe that's the target up here into 315. So yeah, and that's how you're building your daily watch list. You just look at your master watch list and pick the ones that look the juiciest, right? Um, let's see what I had. I can show you guys. Kind of going way off topic here, but I feel like talking about some stuff. So where's the here? This is my morning watch list from Friday, which I had more on there than I normally would, but there were some things that I wasn't really interested in trading, but I just wanted to keep an eye on. Um, Yeah, this wasn't actually on there. I just added that for the video because I didn't have my master watch list pulled up. Uh, so this was on there. You can see like, it kind of got stuffed here. So I'm not really loving this. I would really need to see like a lot of momentum coming into this one. But you can see here that if it breaks above these highs here, I've got a this is an alert in Thinkorswim. So I've got those set to go. Apt is one that I tried to get in and I got stopped out. Um, it wasn't a full 1 hour trade though. Uh, let's see. Yep, this was Coinbase. I was watching that one. EW didn't end up panning out. In fact, most of these didn't. Fate did break the high, but I just didn't like what I saw there. So I think it was later in the day. Um, that's IMNM. I kept that on my radar just because I did have that. I think was it back here that I got in and had a really nice day on it, and then it pulled back and stopped me out, which was okay. But I kind of think maybe this one's got some more juice in it. Earnings is not until mid late March there. Um, JBI might have been a nice entry. I missed that one. Anyway, so this was my watch list for the other day, right? MREO was a decent little breakout. NLOP is something that it's relatively new, and you can see it's kind of done the whole like up, sideways, up, and so I traded this successfully. I can't remember if it was back here, if I got in on this day uh, with the break of the wedge, or if it was up here. I don't remember where I traded it, but it's somewhere. And yeah, anywho, I'm keeping an eye on this one because I like it. Sometimes I do that. It's total bias, right? I like the stock for no reason. Um, yeah, anyway, and then here, that's Shack. This is another one. I was in this, and then it turned around on me, and I stopped out at break even, so we can take that off actually. Yeah. Anyway, so that was basically what I did was I looked through my master watch list and pulled some ones off of there that I liked. I also did a morning scan. I have a scanner that I look for in the morning, which is similar to the ones that we were going over today. Ones that are doing well recently and have certain criteria that I like to look at, and then I pull off whatever looks good from there. So it's maybe like 10 minutes of scanning, 15 minutes of scanning in pre-market, and then uh yeah, and I've got my watch list built. So anyway, guys, I hope that's helpful. If not, I mean, throw stuff in the comments if I was speaking gibberish or if there was something that was unclear. Definitely let me know, and I'm happy to go back over stuff, and maybe even if there's a need for it, we'll do a live session, and that way you guys can ask questions in real time. But I think that's it for today. Maybe sometime we'll go into more depth about building that watch list, like the actionable watch list. But you guys maybe probably get the gist from now. But all right, that's it. I'm done. Bye.